Hello, welcome to the Villages, Florida. My name is David. I'm a realtor with Florida Realty Investments, and I can be reached at DavidisinFlorida at gmail.com. If you're interested in buying a home in the Villages and you'd like to know what a good price would be for the home you're interested in, or you're trying to sell your home here and you'd like to maximize your return in a reasonable period of time, please reach out to me at DavidisinFlorida at gmail.com. I'll be happy to help you. I'll also be happy to answer any questions you have about life in the Villages itself. Couple of things to note. We produce this show every Monday. Make sure you check the date to ensure that you're getting the most recent information. Secondly, all of this information is drawn from the MLS, the multiple listing service, does not include any information from the village's own internal listing service, the VLS. Because of that fact, if you're interested in buying a home in the villages, you really should hire two agents, one who can show you properties on the VLS and one who can show you properties on the MLS. Otherwise, you will not be able to see every home available for sale. Additionally, if you are selling your home, you have the decision to make as to whether to list it on the MLS or the VLS. So, with that out of the way, let's talk about what's happening this week. We're going to start, as we always do, by taking a look at what's happening nationally. And real estate nationally is governed primarily by interest rates. This chart shows us the yield on the government 10-year bond. This bond most closely tracks mortgage rates, and it's sad to note that currently mortgage rates are at 23-year highs. Anybody who thinks that this will not affect the real estate market is kidding themselves. I grant you that the Villages is a unique situation. A lot of people are choosing to move here, and prices certainly seem more resilient here. But if interest rates continue higher, it's very hard to imagine that real estate prices in every market won't be impacted. So here we have the 10-year yield, currently almost 4.1%, just slightly below the 4.3 that we got to towards the end of last year. And we are heading back to the highest interest rates, as I said, that we've seen in the mortgage market at least for a quarter century. Two additional concerning points that may affect us here in the Villages. Number one, the government has come out claiming that many loan applications were fraudulent, where buyers claimed that the properties would be owner occupied and yet they turned out to be rentals. I don't know to what effect this is true in the Villages. I know we do have rentals here. Whether we are going to see forced selling here by those owners or not, I don't know. The other fact that's concerning is if one looks at the scale of government debt issuance coming up over the next several quarters. I mean, these federal government deficits have to be financed one way or the other. These days, they're financed by the government issuing bonds and the Federal Reserve buying them. Seems hard to imagine that that can continue indefinitely. But for today, that's the extent of our look at the macro. Let's turn our attention now to what's happening in the Villages real estate market itself. We start by looking at total listings, which this week are down to 297 from 299 last week. For comparison, the number of listings in effect this week last year was 212. Currently, listings range in price from just under 175,000 to just under $2.7 million. Here we can take a more in-depth look at what price ranges the properties that are for sale are in. If we look at the most active segment, the $300,000 to $500,000 range, this week there are 196 properties for sale. Last week there were 193. The week before there were 200. The week before that 212, and the week before that 203. This is a compilation of all of the listings that are currently for sale in the Villages. The median listing price per square foot down very slightly this week to 258.55 a square foot from 258.61 last week. This figure was 272.68 this week last year. And looking at this chart, we are definitely in a downtrend. As to whether we're in the middle of the downtrend or the end of the downtrend, only time will tell. Here we look at what the median time on the market is for all listings. This week it's 55 days compared to 59 days last week. For comparison, the median time on the market for all listings this week last year was 38 days. And another perspective on listings, this looks at what percentage of listings have been on the market for 100 days or longer. This week, 76 out of the 297 listings have been on the market for 100 days or longer, which is 25.59%. Quite an improvement from the 28.76% that we saw last week, but still far higher than we've been seeing for most of the year. Now we take a look at new listings and pending home sales for the week. Last week there were 36 new listings compared to 29 new listings the week before, and that compares to 31 new listings for the same week a year ago. Number of homes that went pending, number 38 compared to 42 last week and 33 a year ago. If you look at this graph with the blue lines being the new listings by week and the amber bars being pending home sales by week, you can see that even though recently it seems as if new listings has been dropping for the last 2 months or so, the number of homes going pending has remained fairly steady. Here's a more in-depth look at the new listings, broken down by price segment. As I said, this week there are 36 new listings. Last week there were 29, and a year ago there were 31. The new listings range in price from 240,000 to just under 1.2 million. In the most active price segment, the $300,000 to $500,000 range, this week 18 new listings. Last week 20, the week before 14, the week before that 15, and the week before that 13. Here we start taking a more in-depth look at the homes that went pending over the last 7 days, looking first at the price per square foot. 253.89 was the last price on the homes that went pending last week, compared to 255.32 the week before, and down from the 263.84 that was in effect this time last year. Here we look at the median time on the market for the homes that went pending over the last 7 days. 37 days is the median time on the market compared to 34 days the previous week and compared to 24 days this week last year. And here's a look at the change from the original listing price for the homes that went pending over the last 7 days. They saw a median decrease of 6.97% from the original listing price, worse than the decrease of 5.8% that was in effect last week, and significantly worse than the 4.33% reduction that was in effect this time last year. And here's another look at the pending home sales, homes that went pending over the last 7 days. 6 out of the 38 that went pending last week went pending within 7 days of being listed, which is 16% of listings. Not as good as the 21% that we saw last week. And now we look at the homes that sold and closed over the last 7 days. They numbered 35 compared to 39 the previous week, a big improvement from the 19 homes that sold the same week last year. Prices for the homes that sold and closed ranged from $220,000 to $785,000. Here's a more in-depth look at the homes that sold over the last 7 days. This breaks the sales down by price segment. As you can see, the most active price segment, once again, the $300,000 to $500,000 range. Over the last week, 20 homes sold and closed. Previous week, 23. Week prior to that, 26. The week before that, 22. And the week before that, 33. Here we look at the median price per square foot that was realized on the homes that closed over the last 7 days. $259 a square foot, up significantly from the $248 a square foot that we saw last week, and even higher than the $255 a square foot that was in effect a year ago. Based on this graph alone, one might make an argument that the market here might have bottomed. Here we look at how long the homes that sold and closed over the last 7 days were on the market before being taken off the market. For the homes that closed over the last 7 days, 37 days was the median time on the market compared to 34 days the previous week, quite a bit worse than the 22 days on the market that was the median time this week last year. And our last look at sales. This takes a look at the homes that sold and closed last week and examines how many of them were taken off the market within 7 days of being listed. 9 of the 35 homes that closed last week were on the market for 7 days or less, which is 26%, an improvement from the 23% that we saw last week. Here we look at all listings to get some idea as to how aggressive sellers are, and this takes a look at what percentage of all listings have reduced their asking price from the original listing price. This week it's 54.88%, an improvement from the 56.52% that we saw last week, and almost back to the 52.83% of homes that had a price reduction this week last year. And here we look at what the actual decrease was This looks at the median decrease for all listings currently. 4.6% is the median decrease from the original listing price, an improvement from the 4.82% decrease that was in effect last week, and only very slightly worse than the 4.56% reduction that was in effect this week last year. So that concludes this week's look at the Villages real estate market. Once again, if you're interested in buying a home in the Villages and you're trying to find a home you want at a price you like, please reach out to me at DavidisinFlorida@gmail.com. If you're interested in selling your home, I will help you maximize your return in a reasonable period of time. Also, if you have any questions about life in the Villages itself, please reach out to me. I'll be happy to help you. Hope to hear from you. Take care.